In the end, after all that volatility, the major stock indexes dropped for the week by just small percentages. The Dow finished down 1.5%. Still, in just over 3 weeks, the Dow has fallen by more than 1,400 points. To look at where things now stand on Main Street and Wall Street, we turn to Robin Farzad. He's a senior writer for Bloomberg Business Week. Robin Farzad, thank you for joining us. So after this roller coaster week, why were things today calm by comparison?
You know, frankly, people want to just go home for August and forget about the markets. And, you know, a lot of people feel indignant that this happened now. I mean, we know to expect this kind of stuff in September and October, but gosh, you want to be fly fishing now. You want to be in Aspen. You want to be in the Hamptons. And world events kind of flung this onto Wall Street. And I think people step back and realize that for all of that record volatility in 4 days, 400 points up, 400 points down, 600 points up, 600 points down, that in the end, this isn't really accomplishing anything but generating so much stomach acid. So why don't we step back and wait for events to unfold?
Well, we did have these good retail sales numbers today. What do they tell us, if anything, about the health of the economy? And by the way, they seem to be contradicted by consumer confidence survey numbers, which are down.
Yeah, consumer confidence numbers are down to Reagan Morning in America levels. I mean, 30 years ago, or 31 years ago, it just tells you how far this economy has fallen. I mean, after all, unemployment is near double digits. There isn't much to really hang your hat on if you're someone looking for wealth effect. Gas prices are up, certain food prices are up. Cost of living for people is not keeping up with wage increases. And yet you go to an Apple store or you go to certain places in the economy, luxury car dealerships, and you practically have to get in a line. And I think this speaks to the very bifurcated nature of this economy. Certain people are doing very well. And on the flip side of it, you have the CEO of Walmart come out recently and say, you know, you should see the traffic in the store the night that food stamp benefits are recharged. I mean, people are literally paycheck to paycheck, benefit to benefit.
So do we just, does the country just live with this kind of contradictory information, you know, for some time to come? And we keep hearing the word psychologies, the psychology of what investors are doing. And how much is that a factor?
You know, psychology is not monolithic. If you could put the market on a therapist chair, I mean, 1 week it's feeling really bullish, the next week it's bearish, the next week it has mother issues. I mean, look, let's not forget, almost a month ago, we were talking about a LinkedIn tech stock bubble. Dunkin' Donuts was going public. The markets were frothy. Volatility was at a multi-year low. And then, bam, Europe is unhinged. The United States is getting its credit rating cut on Friday. I mean, things turn like that. And I think when you step back, it speaks to the fact that the financial crisis, which kicked off 4 years ago, hasn't played out in earnest. I mean, there were some false starts that maybe were out of the woods. And yet, when you see what Europe is grappling with, when you see the potential of entire economies, not just Greece now, but Italy, France, Spain, potentially defaulting, not being good on their money, it's far bigger in terms of orders of magnitude versus Lehman Brothers or Bear Stearns or Merrill Lynch, which by itself was very difficult to cordon off in September 2008. Imagine if entire economies in Western Europe fall.
Well, speaking of Europe, Americans don't usually pay that close attention to Europe, but how much are people in this country going to have to continue to monitor what's happening on the continent?
We're all connected. It's like that old New York telephone ad. The Federal Reserve here came out this week and pretty much telegraphed and showed its hand and said that we're going to keep rates at record lows at least until 2013. And now what that's forcing people out of into cash, but making it prohibitively difficult to be in cash. Meanwhile, European investors, institutional traders, investors and the like there are piling into U.S. Treasuries at the very time that you have Standard & Poor's saying that we're not as good for our money as we were a couple of years ago. And so that is just pushing everything down in terms of interest rates. And you see investors almost being smoked out of their safety zone, being forced to go and dabble in markets. And yet, you know, put Europe, put Asia, everybody together, we've lopped $7 trillion off stock market values in just 3 weeks.
But it is another one of those contradictions we were talking about a minute ago. You know, we had two economists on the program earlier this week who said the odds of a second recession are now rising. How does that look to you at the end of this week?
to me, it looks like flogging a dead or terminally ill horse at this point. I don't feel like we ever truly recovered out of this great calamity of 2008. Unemployment effectively doubles. The economy loses something like 8 to 10 million jobs. And when we're creating something like 15 or 20 or 50 or even 100,000 jobs a month, that's just not cutting it. It's not keeping up with population growth in the labor force. So this isn't a recovery in the truest sense of the term. I know that's very coldly comforting, but to say that we're on the verge of a double dip really kind of overstates what we've just experienced in the way of recovery.
Last question, Robin Farzad. For ordinary folks who are watching this, what are they to look for? How are they to think about all this as the rest of August unfolds and we head into the fall?
Shut it off. I mean, stick to your knitting. If you had a discipline, you know, before the United States credit rating was downgraded a week ago, had you just stick to your guns and stick to your plan and your discipline and tuned it out and said, I'm going on vacation, and not navel-gazed every day and resisted the urge to sell into these monster sell-offs, which were then followed by monster rallies, again, you'd have preserved a lot of your stomach lining and you'd be more apt to see the big picture. And time and again, that's the lesson here, to have a discipline, to have diversification, to ignore the day-to-day and the noise.
At the same time, appreciating that a lot of people can't go on vacation. So keeping it all in perspective.
Make it a staycation then.
Robin Farzad, thanks very much.
Thank you, Judy. Pleasure.